Welcome to the Cash Flow Guys podcast. Join Tyler and his team as they unlock the secrets to achieving financial independence through wealth-building strategies inspired by Robert Kiyosaki and other thought-provoking leaders.
Learn to build leveraged streams of cash flow that land in your pocket and improve your quality of life.
Gain access to cutting-edge ideas that will increase your productivity and streamline your success. Find out how to supercharge your retirement plan so you won't have to retire with a pay cut.
You can escape the rat race.
Are you ready?
It's time to Learn to Earn with Tyler Sheff.
Welcome to the Cash Flow Guys podcast. We are here again. It is that time. It is Friday morning. If you're paying attention, if you're up, if you're taking action, if you're getting motivated towards heading to your goal, it's that time of day. I need you to get up, get out of bed. Let's get to work. We need to get you some cash flow. If you're still punching that clock every day, you shouldn't be. By now, this is episode, I've lost track now, 82, 83, 85, doesn't matter. We've been talking about this for quite a while. We did recently finished our back to basics process in the show. And now we're going to step it up a notch. We're going to talk about growing your business exponentially. I've got with us today, you guys are going to love this. I've got Michael Blank. I've been listening to his show for quite a while now. I've been listening to Michael Blank. He is the host of the Apartment Building Investing podcast. Michael, welcome to the show.
Hey, it's real great to be here.
I got to say, first of all, I love your show. Absolutely love your show. So thank you for putting out quality content, doing what we do. And I don't have as much experience, of course, as you do. So watching you come up and learning basically as you're going through the different processes of raising capital and how to work through issues and situations, I got to say, I've applied a lot of what I've learned or what I've done exactly from your show. I mean, just right off the cuff, directly as you put it out. You can assure that I'm putting it to use, as is the rest of your listeners. So thank you for that starting out.
Well, thank you. Appreciate it.
So I want to talk to you. You do mostly multifamily today.
That's right.
And now I did read somewhere online that you did start with single family at one point.
I did, like everybody else. Everybody starts with single family.
So everybody's got their reasons, Michael. I want to know from you, why multifamily for you?
Well, it's a more of a convoluted answer because I literally tried everything under the sun in my quest for financial freedom. I've done a software startup that experienced an IPO, and I thought I would parlay that IPO money into what I thought was my big idea to find that financial freedom, which was restaurants. So I did not think real estate, even though I started flipping houses, but my big financial freedom idea was restaurants. And it worked for about a good 7 years. I was a state of semi-retirement and traveled and, counted my money and flipped some houses. And it was nice, but it turns out the business model was fundamentally flawed, and it really bit me in the butt. And I ended up losing 95% of my net worth through that experiment. I've had a short sale negotiation company. I flipped houses. I've been a landlord. I've done lease options. And there was also multifamily in there, right? And so through experimentation on myself and observing others and now working with students and observing them and interviewing a bunch of other people on my podcast, I've come to the conclusion that multifamily is by far the number one way for people to become financially free by any means whatsoever.
So I'm going to ask because this conversation comes up a lot. I hear this a lot. People tell me, well, the way to do it is stock market. The way to do it is strip malls. Why specifically multifamily? What is it about that niche for you that makes a big difference?
Well, let's look at the alternatives you have, right? Stock market, obviously, dividends, unless you have several $1 million, aren't going to cover your living expenses. So you can dismiss that, right, as a way to basically quit your job. So that leaves, well, in the realm of real estate, leaves single-family houses. And obviously, and you and I both know this, flipping houses is a great way to create some chunky cash, but there's nothing passive about it, right? If you're not buying, fixing, and selling houses, you don't make money. And worse yet, once you sold it, there's no residual, there's no more income from that property, right? So, after having done three dozen flips, I finally goes, what the heck am I doing here? I was really, frankly, burning out. And now I had the systems. I'm a systems guy, right? So I had the assistant, I had I had the team in place, but there's really no residual. So I said, I know, I've got it. We'll just start holding some of these things. And that's what I did. And then I was like, wait a minute, before I get too far into this stuff, how many houses would I need to cover my living expenses? And it was like, at the time I wanted to have $10,000 in passive income per month. And I was like, did the math. If I can buy and hold a house that generates $200 per month, which was hard to do, by the way, in almost any market, but let's say I could, I would have needed 50 houses. And I was like, oh my gosh, I just did about a dozen a year for 3 years. It would take me at least 5 years, and that's assuming I can buy it. I was like, man, I'm not prepared to do that. So early on in 2007, I had started looking into apartment buildings. I attended a boot camp, and I actually did some marketing and looking for deals in Texas for a good number of years. And I put all that on hold because of the restaurants that got so busy. So I remembered the multifamily, and I was like, let me dust that off. Let me think about that some more. And the more I looked into it, the more I convinced myself that was actually a viable strategy. The problems I had at the time was I didn't really have a track record in multifamily, and I didn't have any money because it was all deployed in the restaurants. So that was my conflict with the apartment building stuff.
Interesting. That's quite a bit of diversity going from restaurant from software to restaurants and then to real estate of all things. Because usually most people, I'm actually impressed you got out of the restaurant business unscathed, because most people I know that were in the restaurant business, they're working for somebody else now.
Well, I didn't. I basically lost everything from the IPO. Every dollar I had from that, I plowed in. Ouch. I subsequently lost, and I got within probably 3 months of losing everything, like bankruptcy, loss of house. It was pretty ugly. So I wouldn't say unscathed, but I'm stronger for it.
Well, but look at you now. You've come a long way, and I'm impressed with what you've accomplished thus far. And at some point, you had to get to that first deal. Now, for me, that took a while. That was a challenge, and I shouldn't say a while, but it was a roadblock. You talk about the law of the first deal. I heard that you say that on your show more than once. So, can you mention a little bit of what your philosophy is on the law of the first deal?
Yeah. So, I have observed, in working with students, interviewing people on the podcast, that there's something very magical about that first deal. I'll tell you what I'm observing, and I'll maybe give them a theory of why it works, but I call it the law of the first deal. And it says this, if anyone does a multifamily deal of any size, they will be financially free in 3 to 5 years. Now, the evidence actually points to 2 to 3 years, much less than I'm just saying, just to be a little more conservative. But what happened is here's what happens. People decide that they want to be financially free with real estate. They do some research. They finally, however, they come to the conclusion, decide that multifamily is the way to go. From that moment, when they decide multifamily, they've quit their job in 2 to 3 years. And it's because of that first deal. That first deal is the hardest to do, takes the longest. And it's because, you don't have a track record. You maybe haven't acquired the skill for raising money. You have a small comfort zone, right? So that first deal is very difficult to do. But once a person does that first deal, and this is true for any size, whether you do a 50 unit or a duplex. I have plenty of examples of people who do a duplex first, and then their next deal is a 30 unit, right? So the progression I'm seeing is that they do that first deal, and then the second and third follow in rapid, almost automatic succession. I mean, oftentimes the second deal is already under contract by the time the person closes on the first, and they're progressively larger. Why? They're larger because their comfort zone expands. Primarily, they're larger because now they have a network of brokers feeding them deals. They have a pipeline. They've now acquired the skill and the taste for raising money, so what they now can raise more. And the only thing that limits the deal size is in their people's minds their ability to raise money. And so once they expand that comfort zone, their skill level and their confidence, the deals get bigger and bigger. And typically after that third deal, they will have replaced their income.
So, Michael, listening, I can detect your passion. I mean, and you're right, because that's exactly how it played out for us. By the third deal, we were done. We didn't have to work anymore, and that's all fine and dandy. But for that to happen, you got to get through that first deal. So, what do you think? Why don't more people do this? Why are we? It seems like we're the only ones preaching. Some days I go through this. I'm like, is there anybody else listening besides? I tried to tell you people why I'm on a kayak on a Wednesday, but nobody wants to listen. So. Yeah,
because they think that what you have is unattainable and that you're special, and they're not. I mean, usually when I say people, I say, look, everybody's sitting at a RIA meeting. Why are they there? They're there because they want financial freedom with real estate. That's why they're there.
Right.
But they're failing at it because for a variety of reasons, but largely because they're focused on single family house investing. And I say, look, I got the solution for you. And they're like, what is it? Well, it's apartment buildings. They go, right, apartment buildings. Okay, that's very complicated. Where I don't have the experience for that, and I don't have the money for that. So I appreciate you telling me that, but maybe I'll do that once I have a few single family houses under my belt. And that's normally where the conversation stops, unless you provide that person with a little bit of a mind shift.
Yeah, that's for sure. Because for me, and correct me if I'm wrong, it really comes down to we are what holds us back. I mean, we're it. It's not anybody else. I mean, I've had brokers tell me, hey, you don't have the experience to buy an apartment building. I laugh and say, you're going to send me the financials or not? Yeah, I heard it was Joe Fairless, I think, said early on. I was on his podcast a while back, and he was talking about somebody told him that he didn't have the experience, and he came back with, so where in the book does it say how much experience I need? What page is that on?
Joe Fairless is a very confident kind of guy.
Yes, he is. Yes, he is. I mean, getting started talking about that, it's like, because these are valid concerns, because there are brokers out there and there are sellers that I'm hoping I'm never going to be one of those, but that will judge people based on the fact they don't have any experience. So how would you say we get started? What's it going to take?
Yeah, so the experience thing is a real thing, especially in people's minds. And I thought, my gosh, if I have 36 houses under my belt, that's going to be a massive track record that people are going to be able to be impressed with. And what I found was no one cared. The broker was like, well, that's great, Michael, but how many apartment buildings have you done? And I was like, well, none, but I've flipped 36 houses. They're like, yeah, you haven't done anything, have you? Well, no, but right. So number one, that actually didn't help my track record. And once I came to that realization that I wasn't perceived as someone who have a track record, I had to shift and I had to figure out how to overcome that. And the best way I found to overcome that is by basically talking about yourself in the terms of your team, right? So if you don't have something, whatever it is, money, experience, whatever it is, then surround yourself with people who do. So it's just a very mind-shifting example. If you go into a market and you don't have a track record, if you spend some time finding the biggest, baddest property manager in that town that everybody knows, and you align yourself with them, well, guess what? Broker says, well, what kind of deals have you done? And say, well, I'm working with Sam over here. They manage 5,000 units in Atlanta. And they go, oh yeah, Joe's a great guy. And all of a sudden the conversation, goes on. And
right.
you've addressed the experience. You didn't really answer it in terms of yourself, but you answered in terms of the team, right? And so you surround yourself with people who have the kind of experience that you're looking for, right? You can even recruit advisors, right? People who are experienced multifamily syndicators, and you say, hey, do you mind if I, just run stuff by you every once in a while, and can I include you in when I make an offer, can I include you as a member of my advisory board? People say, oh yeah, I love advisory boards. All of a sudden, you have this offer with you, and you have like a 1-sentence paragraph, newbie, and then you have the property manager, and then you have your board of advisors, you have your SEC attorney and your real estate attorney, and they're like, my gosh, look at this team this guy put together, and that whole thing about experience just goes away. So this is an example where just a little bit of education will open hopefully people's minds and kind of go, all right, maybe I'm still a little fuzzy on the details, but I can see how it's possible.
I think you made a very valid point there that I want to make sure that nobody missed. At no time did you ever say, and then I wrote them a check to be on my team, did you?
No.
So you go out and find people that are professionals to be on your team, experienced property manager. You mentioned SEC attorney, maybe tax professional, things like that, contractor, what have you. You find these people, somebody to be on the advisory board. That cost you how much?
Yeah, nothing. Just networking.
Okay. So like, for example, I have my SEC attorney is on my Friday video call, Cashflow Guys TV. He's on there almost every Friday. I don't have to pay him for that at all. I mean, they love being on those type of panels and boards. It brings them more business, first of all, and it makes us look great. So
that's right.
Perfect point. Leverage your team. And then so being a newbie really doesn't matter unless, of course, you've got a team of newbies. If you go to law school on graduation day and say, who here wants to be an SEC attorney? Okay, you're on my team. And then the resume was from high school, then I guess you'd have a problem. But otherwise, you can just simply add these people, put together a little bit of paperwork, maybe a credibility kit or something like that. I don't know if you use one, but putting that together and then leverage the power of your team, I think that's brilliant. And folks, that's what it's all about. See, it's not about, none of that is manufactured. Okay. Those are facts, because if you invest in Michael's deal, you can bet your bippy that attorney is going to be handling the paperwork, or somebody on his team, so to speak. Why wouldn't they? Why would he go to a family law attorney after he's already got so-and-so on his resume? Why not? You talk about, I have a quick test method that my audience knows very well about, but I always love to learn different ways of analyzing deals, because there's no one way, shoe fits type thing. There's many different ways to analyze a deal. I know you have some quick test methods where you can go through a deal or run through a market. I'm sure you get a lot of deals thrown at you, and people know that you're out there and you're doing deals and you're closing. Can you help us go through like a quick test scenario, how we go, no go, what that looks like for Michael?
Yeah. So when I first got started in 2007 with multifamily, it took me literally 4 hours to answer the question, what is the most I should pay for this deal and why? So I can get back and, to the broker with feedback. 4 hours, right? That's a lot. And so, as you know, it's a real estate is a numbers game. And so spending 4 hours to answer that question is a long time. And at the time, I didn't have the tools that I have now, nor the technique. But now with this process, I have this down, to 10 minutes. The major mistake I was doing was that I was doing way too much work on underwriting or analyzing the deal than I needed to, because I didn't really even know if the seller would consider a lower price, or how flexible they were. So I was spending all this time researching, coming up with a number, which of course inevitably was lower than the asking price. They always are. And you never hear from the broker because you missed the mark. So I was wasting a lot of time. And as a result of that, I was making less and less offers, and I was getting more and more frustrated because of my inability to make offers. And that stops a lot of people in their track from doing that, because they feel it's very complicated. And it can get complicated, but not in the beginning. In other words, when you're first making your offer, it's a little bit different than single family house investing, where you might just fax over a contract. The offer making starts verbally, informally via email. And typically, if you start getting into the seller's strike zone, the broker strike zone, you're invited to put it in writing with a letter of intent, which is a non-legally binding, 2-page document that basically summarizes the salient points of the deal. So you wouldn't even throw an LOI over the fence unless you're invited to do that. So there's a lot of informal, what I call feedback, which are all forms of offers, right? So, asking price is $1 million. I did the numbers, based on your vacancy. They look a little low. Normally I like to use 10% vacancy, so I'll adjust that a little bit. Your expenses, as you reported to me, man, they're really low. And the rule of thumb normally is 50% of income should be expenses. Yours is like 35%. So I adjusted that a little bit. Then I took your cap rate that you put in your marketing package and applied it to the new modified net operating income. And really, the fair market value which you're offering is $750,000. Is that something you would consider, or probably not? Right? So I've taken their numbers, I've applied some rules of thumb, I've taken their cap rate and their valuation method, and I basically said, look, based on your own numbers here, it's actually worth $750, not $1 million. Is that something that your seller would consider, or probably not? And if you never hear back, well, shoot, you obviously missed the mark. They're not very motivated, but you only spend 10 minutes on making them the initial offer. Now, sure, if they do a counter offer and they say, well, what did you have in mind? Put something in writing. At that point, well, it's time to sharpen your pencil, and you need a good modeling tool that I offer as well. But that's not really necessary up front, right? Don't waste a lot of time. So in other words, it doesn't really become relevant until you're invited to kind of sharpen your pencil. And a lot of people just over-engineer that, especially in the beginning.
So do you find, how much information initially do you require up front to get to that point to where you're going to, we in our market, just to give you an example, there's this, let's say we're looking at a 100-unit building. There are brokers that will just not respond at all, or brokers that when they do respond, they don't have any information on it, very little, or it's all pro forma. It's like, so how do we, and pro forma folks, that means that's a fancy word for guess is what that means. That means guess. Investopedia has a whole different word, but we'll call it guess. How forthcoming do you find in your market, or the places where you're playing the brokers and the sellers and giving you enough data to make that decision?
Yeah, so it depends on what phase of the process you're in. If you're in the beginning phase, you're going to make your offer based simply solely on what they provide you, right? So if in their package they provide a pro forma, well then daggone it, you're going to apply your rule of thumb and your offer to that. with the understanding that you may communicate an email that you're making your offer basically on a pro forma, which in your experience is probably a little more optimistic than reality. Isn't that right, broker? Oh yeah. I mean, no, that's not. So go ahead and make the offer based on that. So as long as you make offers based on assumptions that you disclose to the other side, and once things are uncovered that are to the contrary, well, that changes the deal. Now, but as the farther you get into a deal, then the better the information should be. But oftentimes you're working with incomplete information. So one of the best ways I found to kind of address that is again, this is where your team comes in. If you have a really good property manager, they can help you tremendously getting into an offer and also during due diligence, right? So for example, if the broker is saying that the rents can be raised $100 a month if you did these kinds of repairs, well, if you have a good property manager, they should be able to validate or invalidate those assumptions because they know they do rental comps, the good ones do all the time. They can say, oh yeah, that's totally in line, or like, no, that's ridiculous. Or they might say, wow, shoot, the rents actually should be a little higher. So you have your property manager validate or invalidate a lot of the numbers that you get from the broker. So it's very important to have your team in place. And the farther you get into a deal, the better the information becomes. So for example, you may put a deal under contract with pretty good information, but it's certainly not the same as doing due diligence where you can look at the exact financials, the exact leases, the exact everything, right? And so you have to, in other words, you have to be comfortable in taking action with the information that you have, and it may be incomplete as you get into a deal.
So you're knowing that going in. So in that example, we've got, let's say they tell you that, I don't know, the income is 100,000, the expenses are 50,000, whatever, $50,000 left over. You're going to base your offer based on those numbers, 100,000 coming in, 50,000 going back out. And you're not going to require the whole due diligence packet on the front end of this. You're going to, and based on that, so that I'm clear and the audience is clear, then you're going to put out a letter of intent that says, based on the information you have provided me, I offer you X in these terms. Yes, no, or indifferent. And based on that response, then you would go into earnest money and writing an actual contract and the whole 9 yards. Is that correct?
Right. That's right, because that phase costs some money. So typically, oftentimes the seller will provide the contract. Well, you have your local real estate attorney kind of review that, and that's going to start costing you money. And so you don't want to tell the attorney to start drafting something when you guys don't have agreement on material terms. And that's how the letter of intent helps you to document what those are.
Now, in your experience, from the time you get to the letter of intent and you get through the due diligence process, you go letter of intent, contract, and then due diligence, correct? When you get into due diligence, how often do you find yourself having to go back and renegotiate? All the time? Sometimes?
Sometimes. So you want to try to minimize that as much as possible because you will get a reputation for what's called retrading. I wouldn't say it's commonplace, but there are people who basically, it's kind of like getting a contractor and going in as a low bid and then change ordering the client to death. Right. So you go in there with a high bid, get the contract, and then 2-3 weeks later you kind of retrade the deal because you've quote magically uncovered things that weren't there before, and you ask for repair credits and a reduction in price and all that stuff, when in fact you really had no intent of closing it at that price. And so you do that, and you develop a reputation for retrading, and it's not a good reputation to have. However, the purpose of due diligence is to actually uncover things that perhaps you didn't know about. So, last year we were under contract for a 51 unit, and we were told that it essentially required no repairs. And so we said, okay, maybe $1,000 per unit just to be on the safe side. And once we got there was water problems, there was foundation issues. Some of the walls were separating, the vertical walls were separating from the building. And we had a contract there walking the property, and he gave us a bid, but it was in the hundreds of thousands of dollars.
Wow.
And so clearly that was not disclosed. Now we were under contract at this point about 10 days, and we reviewed all the financials and all the documentation before we flew out and visited the property. And that's an example where that's the purpose of due diligence, to uncover stuff like that. And at that point, you have two options. You can either just terminate the contract, or you can renegotiate the deal. In this case, we said, look, there's $250,000 of problems with this property. We're going to ask you to drop the price by that so we can fix it. And the seller, who was in Miami, didn't think that was necessary. And so we just parted ways. And as long as you can clearly document why you're trying to retrade or renegotiate a deal, as long as that's easily understood, normally the parties don't have a problem with that. It's just when someone they feel like you're getting cold feet or change of heart, or you're trying to, it's a negotiation ploy. You want to try to avoid that.
So I'm going to ask you the common question that I get a lot, and I'm curious what your answer is. Chicken or the egg? I mean, some people say, well, I can't raise money until I have a deal, and other people say, well, I can't get a deal until I have money. Which comes first, the money or the deal, or do you focus on both concurrently? In other words, are you always raising money?
Well, the answer is I'm always raising money, but it's easier for me with some people who have a track record and they can show deals. The biggest question is exactly right. I don't have a deal on a contract, so how can I go raise money? Right? That's true. Or I have a deal on a contract through some miracle, and now I don't have the time to raise the money. This is also true. Is people kind of go, I can't solve this problem and I'm stuck. So I have a solution for this, Tyler. You want to hear it?
I do.
I call it the sample deal package. So the sample deal package is an investor package of a real deal. It's got a real address, it's got number of units, price, it's got photos, it's got financial projections. Everything about the deal is real except for one thing, which is you don't actually have it on a contract. Now, you tell your investors that you don't have it on a contract, but you use it as a conversation piece and you behave as if you do. And so this opens up a conversation, because normally the conversation goes, well, talk to me when you have a deal. And you go, okay, I'll talk to you when I have a deal. Now you have a deal, and now you have like 45 days to close and raise money, and it's really tough to go from something from zero to writing a $50,000 check a lot of times. You can't do that, right? What you really want, the ideal situation, is that you have verbal commitments from your investors who have already asked you questions, voiced their concerns, and are comfortable with you, your team, and the kind of deal that you're doing. So when they see the actual deal come through, they'll look substantially like the same. They might have a couple of questions, but they're already prepared. They already told you they're going to invest. And so we use a sample deal package as a conversation piece to try to get that verbal commitment from investors long before we put something on a contract.
That's a fantastic idea. So I like the fact that you're using a real deal. You may not have that contract under contract per se, like you said, but at least you're using a real deal, something tangible. If worse comes to worse, they could go out and touch it, feel it, do whatever, see that information. So I think that's fantastic. Yeah. It makes a lot of sense. As far as along those same lines, one of the biggest, I believe it's a limiting belief, I'm sure you would agree, is I don't have the money to invest in multifamily. I need to save up my money. I'm going to flip my way to invest. I'm just going to flip for a while. And then when I'm done with that, miraculously, I'm going to have these big piles of money. I'm going to go buy an apartment building. First of all, have you ever seen anybody do that effectively? Ever? No, not really. Not really. And the problem with that is that, first of all, it takes a long time to get there, right? And then let's say you actually do get there, which just that chance alone is slim, but you do one deal and your money's gone. And now what are you going to do? You can wait another 7 years to save the money. It's just not, it's not very practical, right? It's just not. Thank you for saying that. A lot of people have come to me lately and said, geez, I'm just going to flip for 2 years. Yeah. Before the market crashes, I'm going to race the market down. It's like, oh yeah, you're going to race it. All right. It's going to run over you like a freight train, but that's okay. You're an educator, and I see that. And what's interesting though, is I want to know more about that. You spend a lot of your time educating people that you're going to do business with, which I think is cool because I do the same thing. So can you touch on that a little bit? What type of programs you have available? Yeah. So my website is themichaelblank.com, and it's all about apartment buildings with a special focus on raising money because it is such an important part of that. And so I also have a podcast, I have a YouTube channel. I've been blogging for the Bigger Pockets over the last 2.5 years. And I also have some paid programs. I have some analyzer tools, online programs, and coaching. I have my first live event in October where we're going to simulate a real deal from start to finish. And so my passion really is helping people become financially free with real estate, specifically by focusing on that first deal. Very nice. Now, can you tell me a little bit about the October event? What's involved with that? Because I may get on a plane for that one. So I've done this twice before. It's basically, I have found that experiential experiences shift mindset and comfort zone more than a lot of theoretical stuff, even watching an online training program. So I've done it before, and it was called I called it Buy with Mike. So I had students virtually. I was a seller, and they were the buyers, and we went through this, and we used a 51 unit at the time, where they basically went all the way through from defining the deal
and analyzing it, making a bunch of offers back and forth, finally getting the contract ratified, doing due diligence, reviewing all the due diligence documents, uncovering some of the issues and what those were. And there was some twists and turns in the virtual property tour, and eventually, hopefully, closing it, or maybe not. All right. And so what I found is I really shifted their comfort zones. It expanded. Like there's one guy's name is Roger. He was really focused on a 10 unit. By the time he was done, he was like, man, that's it. I'm not looking at anything less than 50 units because of that, because he's gone through that now virtually. So what I wanted to do is I wanted to do that for a larger audience, and also want to do in person. I'm virtual, kind of like you are. I kind of like hiding behind my microphone and my camera. And people are like, well, how can I meet you in person? I'm like, you can't, okay? That's right. By design. And so I stopped doing the Buy with Mike because it was a lot of work for me to do that. But the impact on the student was so big that I filed it away. And I was like, someday I'm going to figure out how to deliver this in a way that makes more sense. And so I'm going to do that in October in the Washington, D.C. area.
Washington, D.C. Outstanding. Is that going to be on your website?
Yeah, it's going to be themichaelblank.com/summit. There's also a tab for events, and that will get you there as well. So I'm really looking forward to that. I think it's going to make a big difference in people's minds. And again, I really want to help people do that first deal, because I know if they do that, they're 2-3 years away from, quitting their job or whatever they want to do.
Speaking of that, so there's a lot of great points here. A lot of the stuff is, I've learned a lot from this episode, number one, but there's a lot to think about, and you got to break that out somehow. I'm a big believer in one thing. Those of you that listen to the show for a while know we had the author, Jay Papasan. He was here from The One Thing, and today's his birthday, by the way. Skype told me that. How about that? Kind of creepy. That's a whole other story. So what's the one thing you think at this stage of the game, you listen to this episode, what's the next thing, the one thing that someone should do to become successful in this space?
Yeah, just focus on your first deal. It's that simple. Don't focus on your retirement, how long and how many units you have to own. It's really completely meaningless and will overwhelm you. So instead, just focus on that one deal. What I tell people is that first deal has to be both meaningful and achievable. Meaningful meaning that it's a meaningful step towards your goal, and achievable, something you can do in the next 6 to 12 months. Let's say 12 months to be conservative, right? So in other words, if you're a high income earner and you're looking to replace $20,000 in income, well, a duplex would not be very meaningful, and it would be highly, highly achievable. You can probably pay cash for it tomorrow, right? So if you're that kind of person, you probably don't want to start with a duplex. On the other hand, I had a UPS truck driver who did his first deal, which was a 4-unit. And he had to replace, his rat race number was $4,000. So a 4-unit that he bought with hard money, that was a meaningful deal for him in his situation. And that's also something he could achieve in the first 12 months. So pick a unit size that is both meaningful and achievable for you. That's kind of number one, and then get really tangible about that. So the sample deal package we talked about, right, it's a tool we use for raising money, but the other thing it does is visualizes your first deal, right? So if you're going to, let's say I'm going to pick a 10 unit, then you create a sample deal package that embodies your first deal. That means you found it, you've analyzed it, you crunched it, maybe you made a few phone calls, maybe you even went by. So that first deal now becomes so real to you that you can just visualize. And as you know, when you can visualize something, you start believing. And when you start believing something, well, you have no trouble taking action once you do that. And so that's really the power of that first deal.
That's absolutely correct. Now, we just put out a course called the Cash Flow Blueprint through a collaboration with one of our mentors, Larry Harble, but I know you have a blueprint as well. Talking about the first 30 days. You want to run through that real quick before we close? Yeah,
so it's kind of what do you do? What do you start with first? And I really have a kind of the 12-month blueprint to your first deal. But it's what do you kind of do the first week, the second week, the third week? What do I do after that, right? So let me just outline that really quickly. I kind of have the first phase, which is kind of what I call the pre-launch sequence. And in that phase, you basically, in week one, you educate yourself. So you attend an online program, mine or someone else's. There's an education component there. And you can go through the entire course and just kind of drink it from a fire hose. Then in the second week, you're going to clarify your first deal, kind of like what I talked about earlier. You want to really clarify your first deal. In the third week, you're going to analyze your first 5 deals. Now, why analyze and why 5? Well, analysis is a foundation skill that's required for everything. It's required, obviously, to improve your language and your skill set. It's required to make offers. Right. It's also required to get up your confidence as well. And so that's why we analyze 5 deals. And then the 4th week, we kind of create your sample deal package. So now, in that 30 days, you have everything you need to basically be launched into the world without sounding like a bumbling idiot. That's kind of the purpose of that. And then the next 60 days is all activity focused. So it's not so much outcome focused, it's activity focused. And you're going to be doing 3 things. One is you're going to be analyzing deals, you're going to be building your team, and you're going to be meeting with investors. That's it, those 3. And you have, accountability goals for each of those. And you're not focused really on outcome, just activity. Now, I can tell you, if people do that kind of work for 60 days, there actually will be an outcome. You will, in fact, have a team ready to go on the ground. You have a property manager, you have a mortgage broker. You'll probably have a pipeline of deals, and you'll probably have a pipeline of investors who either have already committed or about to commit to you funds for that. And then essentially that over the remaining 9 months, you're just building your pipeline and you're closing your first deal. So it's building up that, first the knowledge, skill level, and confidence, and then the activity, the new discipline. And after that, it's just a matter of time.
And then, as you said earlier, once you get that first deal done, then I can't think of one time where I haven't helped somebody get a new deal or done my first deal in a different market or whatever, and you just get the steam rolling. It just starts, gaining momentum, and then it's like a train running out of control. Now I don't think twice about it. I'm like, oh, look at that. It's orange, a purple trim. Let's buy it.
Right.
Knock 20 off for a paint job.
It's like a giant domino, right? Getting that first domino. Imagine a domino that's barely, you can barely budge. You really have to take a hard push out of it. Once that domino falls, that next domino essentially just falls automatically. And that's kind of like what that first deal is. It's that giant first domino. It's really overwhelming, really hard to do. And once you knock it down, it's literally game over. I mean, all you got to do is sit back and let it happen at that point. That's how automatic that second and third deal becomes.
That's just it. Yeah. I mean, because a domino, once it's laying on its side, is easy you can just walk right over it. But when it's standing up on end, it looks insurmountable. So that's fantastic advice. Anything you want to leave the audience with before we sign off today? Yeah,
I just encourage everyone to kind of look at your goals, financial freedom, and really examine the strategy that you're using to do that. And then really take a serious, hard look at multifamily. I think we talked about a lot of the limiting beliefs around that stuff, and maybe that helped you overcome some of those objections. And I just have found a lot of people reject multifamily investing for the wrong reasons. So I'm hoping this episode kind of, creates some awareness and encourages people to take a serious look at multifamily.
Outstanding. Michael, thank you so much for coming on the show today. And ladies and gentlemen, if you want to learn more about Michael, you can access his contact information on our show notes, and also themichaelblank.com. That will be in the show notes and available to you. And Michael, I really appreciate you taking the time. I got a lot out of this episode. I learned something. I know my audience did too. So I really appreciate you taking the time.
Oh, my pleasure, Tyler. I really appreciate it. Thank you.
All right. Have a great day. Ladies and gentlemen, that's going to wrap us up for today. And as always, if you have not joined the Facebook community, go to cashflowguys.com/group. That will take you directly over to our Facebook community. Why do I have it that way? Well, because Facebook search engines, they change every week, and I can't keep up with it. I'm too old and not smart enough for that. So we kept it simple. We got a pretty link. Go to cashflowguys.com/group. Get you over to our Facebook page. If you have questions, you want to reach out to me directly. As you know, every Friday afternoon, I give a free 30-minute consultation to anybody listen to the show. Go to cashflowguys.com/ask Tyler. Get on my schedule. No obligation. Nothing's for sale. We talk about whatever you want. The weather, multifamily, single family, rehab, doesn't matter. Maybe I can talk you out of flipping a couple houses. Who knows? But cashflowguys.com/ask Tyler. And until then, we will see you next week.
This concludes today's episode. You don't have to wait till the next episode to learn to earn.
Head over to cashflowguys.com and contact Tyler and his team for more powerful tips and ideas so you can start generating multiple streams of income and escape the rat race.